What is going on, everybody? We are back again with another video, and in today's video I'll be going over some buys that I took on the NASDAQ for NFP, and this is going to be in reference to internal to external range liquidity utilizing time frame alignment and a lower time frame market maker buy model. Alright, now like always, like I do in my previous videos, I always start off with a naked chart, and here's the NASDAQ on our daily. So before I show my annotations, I want you guys to pause the video, mark up the chart, see what you see, and then you can compare it to what I show in the next slide. So here are my annotations on the NASDAQ, and a quick shout out to 2 Degrees for his economic calendar indicator on TradingView. And like I said, we have NFP on Friday, and this is Monday, Tuesday, Wednesday, and Thursday's price action. And you can see that on Wednesday here, we had FOMC statement, and on that Wednesday, price dropped into discount of this daily dealing range. And once we dropped into discount of that daily dealing range, Thursday's price action closed above the daily volume imbalance here, and we closed above the mean threshold of this potential daily bearish order block. So we were violating bearish PD raise and respecting our internal range liquidity pool drop, the discount tag, and now our next ideal target would be any swing highs, which would be our buy side liquidity external range draw, which was this high, and this ideal dealing range high. And another thing to add is that we had SMT divergence inside of our daily key level. So what we're going to do now is drop down to our aligned time frame or hourly chart, just so that we could frame structure to look for potential entries. All right, now a quick pause before going and continuing the video. I wanted to tell you guys about the promotion that Day Funded is actually running currently right now that I just hopped onto. They're currently running a promotion where you buy one challenge, you get one free plus 50% off. So let's say you wanted to buy a 200K evaluation account. That would typically be $900, but this 50% off coupon is charging you $450, and you're getting 2 accounts. 2 100Ks would run you about $235, 2 50Ks would run you $165, 2 25s $115, 2 10Ks are $65, and 2 5Ks are only $30. Check out their Discord for full-time customer support and their Twitter. You can see their proof of payouts. Definitely recommend hopping on this promotion. I'll have the link in the description below. Capitalize on this opportunity, get funded, get a payout, and best of luck to you if you do it. All right, so back to the video. We have our 1-hour chart for the NASDAQ. And as you can see, we're monitoring price and looking at the reaction off of our daily key level. And as you can see, once we created that SMT divergence here with the YM, price then broke structure, clearing above this high, and now we have our anticipation going into NFP at 8:30. And I measured this range from this low to this high, and as well as our daily volume imbalance. So what I'm assuming and anticipating is for price to have a Judas swing on NFP data release, to drop into discount, and then continue higher to our buy side external range liquidity pools. Fast forwarding to our data release at 8:30, we actually had price miss discount very slightly, but we reached our daily volume imbalance, and we created SMT divergence with YM at that daily volume imbalance tag. And as you can see here, here's a little snippet, price tagging that hourly key level on the YM, but missing it on the discount tag for the NASDAQ. So what I'm going to do now is drop to our M5 chart and wait for equities open to see if we can frame a market maker buy model to look for entries to our external range liquidity pools. So here is past equities open. Here is our tag of the volume imbalance. And as you can see, when we tagged the volume imbalance, we swept these lows, we created SMT divergence. The ES made a higher low and the NASDAQ made a lower low. And what I noticed is that we closed above this swing high before sweeping liquidity and displacing higher. So this is technically labeled now as a potential smart money reversal. So fast forwarding in price, we measured our manipulation leg that took out liquidity and broke structure from this swing high to this swing low, and we projected price higher for 2 to 2.5 standard deviations as our first objective. And as you could see, price did displace higher, but we didn't get the retracement back into that down close candle or even the up close candle for our breaker setup. So what we would be looking for as potential is when price reaches that 2 to 2.5 standard deviations, we look for a retracement or a reversal. But since our higher time frames are lying to the buy side liquidity draws, our external range, I'm looking for this 2 to 2.5 standard deviations reach to retrace, run any potential buy stops, to then create an intermediate term low to push higher. So our market structure will line with our draw on liquidity. So right now, as we have price move, this would be labeled as a long-term low. This is a short-term low to the left, and all we have to the right is short-term low, short-term low, short-term low. So I'm looking at this as just like a trend line liquidity with this up close candle as a potential mitigation block for a PD array or a run on buy stops to form inside of this POI. And moving forward, that next candle, we swept these buy stops looking for a potential intermediate term low to form. And like I said, we did it inside of this up close candle, labeling this as a mitigation block. So what I'm going to look for next is price to push up, closing above this high, confirming our intermediate term low, and then looking for a short term low to form to the right of that. And as you can see, our next step, what we just did, we had our intermediate term low, which is labeled as our low risk buy. Price pushes up, closing above our swing high here. And we took out the relative equal highs, that M5 external range liquidity pool. So what we would like to see now is a retracement into an internal range liquidity pool on the M5, because like I said, the external and the internal range liquidity, it's a fractal concept. So it's looking for the same thing on the higher time frames, same thing on the lower time frames, because the market books the same way in price. So what we're looking for to the right of our intermediate term low, because we swept these short-term lows, we're looking for a short-term low to the right of that for another potential long entry. And as you could see here, price did drop into that M5 discount, tagging this M5 bullish fair value gap and the order block. So this to the right of the low risk buy would be labeled as our accumulation, which is another long setup or an entry that you could have had to our external range or 4 standard deviations target. And as you could see, as simplistic as it was, price pushed up from its discount drop when we created our short-term low for accumulation, and then price pushed up, continuing higher, closing above swing highs, closing above body highs, formed another order block here. Use that as a reference point for reaccumulation. As you can see, this would be our silver bullet entry for price to drive directly to the 4 standard deviations mark and eventually reaching our external range liquidity pool target. And in my opinion, I think this was definitely one of the cleanest trade breakdowns or trades that I've taken in a while. The market maker buy model lined up perfectly from our daily key level to our hourly key level to a M5, MMBM. It lined up perfectly with our economic calendar, NFP delivering our Judas swing, equities open was our reversal, and then price continued to our original external range draw on liquidity. Now, again, I will continue uploading trade breakdowns with the same concepts, the same view on price that I do on every single trade. And as you can see, consistency is the key to profitability. Once you start doing the same thing over and over and over and over again, you'll develop a system, you'll develop a model, and you'll only trade once you start seeing the same repetition repeat over and over and over it again. And once you start doing that, and once you start collecting enough data, you'll start to understand when to be in the market and when to stay out of the market. This will eliminate your feelings of FOMO and reduce the itch to try and be active every single day in the marketplace. Once you fine tune that, everything will be smooth sailing from that point on. But I genuinely hope you guys enjoy these videos. I will continue these every single Wednesday, prioritizing trade breakdowns. I'll also have the re-up of weekly outlooks being posted on Monday nights. I apologize for my delay on those, but I hope you guys have a good rest of your week with trading. And like always, I will see you guys in the next video.